Breaking news in the state of California in the short-term rental area. It appears, thanks to a co-friend of ours, Stratton Brown, the California Senate has passed a 15% tax on short-term rentals, specifically focusing on Airbnb. They're looking to use this tax, SB 584, to raise $150 million for affordable housing. Mr. Jason Pritchard, you have some Airbnbs. This will affect you, assuming this post is true. Yeah. What do you think of it? And then just love to hear what's going on in Airbnb in Fresno.
It was kind of shocking initially at first. I mean, when we just first logged in, you told me about it. So I had a chance to scan it as we were prepping for this call, man. And I have a lot of initial thoughts running through my head. I mean, it's the thing that people constantly talk about when you're investing in California. The state here just likes to overreach and dip into our pockets sometimes. And so that's frustrating as a property owner. And, you know, all the work that we put into doing this, right? Knowing right off the top, we're going to lose another 15%, you know what I mean? And so, you know, it's been a struggle with Airbnb over the last 12 months anyways. I feel like we've been going through some growing pains, and people that have been managing short-term rentals, at least in our market, would probably share kind of the same thing. And so this is just another kind of straw on the camel's back, man. So I don't know. I don't know how we're going to respond to it and how it's all going to work and how it's all going to get implemented. It's just a new article now. So I think we just put our heads down and keep on doing the work, man, like you talk about.
Yeah, so I think there's a couple of things. When I think about short-term rentals, obviously I have zero skin in the game. So it's, you know, take my feedback or thoughts for what it's worth. But I saw a lot of people come into Fresno and other markets, which, let's be honest, Fresno is not a great traditional Airbnb market.
Correct.
Right?
Yeah.
It doesn't have the beach. It doesn't have this. It doesn't have that. But it killed it. 2020, 2021, we know a lot of people just printing money. People weren't going to hotels. It just was a great business. And a lot of people made fun of me because I never went there. Not that we didn't think about it, but I'm like, nope, not my model.
Yeah.
I'm, you know, just to me, it's a different business, right? It's hospitality.
It is.
And I didn't want that. So I saw Fresno, again, these are my numbers, not yours, kind of spike at total listings at about 15 or 1600.
Yep.
I think today, I looked the other day, it's about half that.
Yeah.
So that was even before this. So I think what happened is just a natural culling. People thought it was too easy. The money's bad. It wasn't the easy get rich quick people thought it was, which means probably the people that are left are probably doing better now than they were last year. But I don't.
And that's been true for me. And we were talking about that a little bit before we jumped on. And it has been this period of like weeding out some of the people that were just kind of not built for the long haul. We've talked about how this natural kind of selection process was going to happen. And I think you've called it. We've talked about it before. I think a lot of people jumped in towards the tail end of it, right? Yeah. Thinking like, oh, this is going to be easy money. You know, we just put a travel nurse in there and we make 3 times what we would normally make as rent. And, you know, we just kick our feet up and don't do anything. And it just absolutely doesn't work like that.
It just happens. Yeah.
Yeah. So I think we were fortunate that when we came into it, we had real estate experience managing a large rental portfolio. We had systems and team members in place. And I was able to kind of model what other successful people on my network that manage large short-term rental portfolios. And I just took their systems and plugged them into my team. So for me, we were not in a position where, even if our Airbnbs, and there were plenty of months where they were break even, or we took small losses on one and we offset them by wins from others, where we were making no money on them. Right. And now I feel like we've weathered that storm. The supply, like you said, has shrunk considerably. Right. And now the people that were more built for the long haul, I think, are reaping some of the rewards. Like we've had some really, really solid months in 2023. We've had one of our units that has been booked out for 6 months straight. And we're getting 3 times what the rent is from a traveling nurse with no other issues at all. So Airbnb for us this year it's been a good year.
That's awesome. And again, right, just knowing supply and demand, how it works, if this goes through and there's truly a 15% tax, that will be enough to push more people out of the market. So if you're 50% of last year, I don't know what the number will be, but it'll certainly be 10%, maybe 15%. Because again, you're talking about a healthy margin. That's 15% off the top. That's not 15% of net. That's
of net.
15%
Yeah, it's gross.
Gross.
Yep.
So that's going to hurt a lot of people.
I think it's gonna be a two different dominoes are gonna fall. I think one, you're going to see people that have kind of this snap reaction to that, and they're like, nope, I'm not doing it anymore. The people that are already on the edge, that are like not making money now, or already don't like the hospitality component of the business and like having to deal with all the check-in, check-out, managing all that. That's going to be enough to just be like, nope, I'm tapping out.
I'm done.
Yeah. And then the other thing, which always happens when we get some of these new tax initiatives, is the business owner is going to pass that to the guests, dude. So guess what's going to happen to the rates when they come up? I don't think, I mean, it doesn't take a rocket scientist to figure out what's going to happen. And so ultimately the people that are staying there are probably going to end up seeing the rates increase because people are going to raise the rates. So,
well, let me ask this kind of closing question. I know on the channel, I think it was 6 months ago, you had a property that you remodeled that you were going to make Airbnb. At the last minute or near the end, you decided to sell it versus add another one because I think your Airbnbs weren't performing, right? This was kind of late last year. What are you going to do now? Your Airbnbs are performing. You're probably going to see less competition. Is Jason and Jen going to go buy another Clovis Airbnb or what's going on?
So for me, it would only be if it's a slam dunk. That's it. And so like for me, it's like, this is an absolute no brainer. Like we're getting a steal of a deal on the price. It's a great location. It has the amenities like the pool or the spa or the things that we have there. It would have to check every single box because I'm in the spot right now where we're being very, very conservative with everything that we're doing with long-term rentals that we're buying, even the idea of thinking about adding another short-term rental, unless it's just some smoking deal, because we're just in this weird space in the market and the economy where there's a lot of kind of things going on. And, I've talked openly about some losses that I've taken on some of the deals that we had towards the tail end of 2022 and the beginning of this year. And so I feel like, I'm going to be a little bit more conservative with just everything. And we're only going to do things that are slam dunks when it comes to, outside the box things like an Airbnb. It's not our main business. My main business is buying, fixing, selling real estate, taking the money from that, buying rental properties. And I'm trying to be really, really great at that right now. So that's probably what I'm focused on.
Yeah, so we're going to get that in video number 2. Video number 2, we're going to talk about your business and catch up on what's going on. I think this will be part of that discussion. Again, basically what I hear you saying is you have a very, very tight buy box for adding an Airbnb, but if something came in and landed, you're not opposed to it. I think that's what you're saying.
Yeah, it is. Because we do, again, man, like now we talk about this all the time. Like the opportunity to buy is when everybody is scared, right? So right now, Airbnb is no longer kind of this thing that's very in vogue and chic and all this other stuff, right? People are scared. So we have to be contrarian in our thinking. And sometimes we go against what the grain is, right? And we say, here's the narrative that's being pushed. Now, I'm not saying I'm going to go all in and start gobbling up market share with Airbnb. What I am saying is we have learned over the last 2.5, 3 years of running short-term rentals for our market, the profile of a property that works well as an Airbnb. So if that property fell in my lap and it was just checked every single box, then I would say yes. If it doesn't, then we're going to stick to business as usual.
There you go. I love it. We'll dig into that more in video number 2. Jason, where can people find you and get all the free stuff that you give away?
Yeah. The best place, guys, to get free resources for me is our website. We spent a lot of time and effort building that out. And so if you just go to jasonpritchard.com, you can sign up for the site. It's completely free. Just put your name and email address in there. And we have all of the core documents, everything that we use in our business on a day-to-day, plus a bunch of training materials and resources available for 100% free. So all you got to do is log in. You can message me directly on there too. If you got questions or if I can be of help to you or to your audience, man.
Yep. JasonPritchard.com. Do me a favor. Go there today. Send them a note. Tell them you came from One Rental at a Time. Thanks, bud.